Hello student, this is Palla Darbari, your host, and you're watching Palla Darbari classes. In this video, we will discuss Macroeconomics class 12th, National Income and Related Aggregates, Chapter 1b, Volume 1. In this video, we will discuss the meaning of national income. We will see the aggregates of national income, and we will also discuss the numericals. Let us start the class with the definition of national income. Listen, national income is the sum total of factor income earned by the normal resident of a country during the period of 1 year. In this definition, we have seen two important things. One is factor income and the other is normal resident. So according to the definition, national income is the sum total of the factor income, means the money which a person will get after giving factor services. So it is the sum total of the factor income, money earned by giving factor services, or the monetary value of the factor services, which is being earned by the normal resident of a country during a period of 1 year. The question is, who is the normal resident? The normal resident can be an individual or can be the organization, number one. That very person should be in the country for more than 1 year. Second point. Third is, the individual or the organization should have an economic interest in the country. When I say having the economic interest, what it means? It means production, consumption and distribution is going on within the country. So he is the normal resident. He might be an individual or organization. Should he stay in the country for more than 1 year and having an economic interest. So any organization having an economic interest stay for more than 1 year is the normal resident. Now let us discuss the method to calculate national income. Listen, there are three methods to calculate national income. Number one, output method. The other name of the output method is value added method. The second is income method. And the third is expenditure method. So here we have seen that there are three methods to calculate national income. Number one, the output method or value added method. Then income method, and the last one is expenditure method. So we have seen the meaning, we have seen the methods. Now let us see what is the meaning of and what we do under the outlay method or the output method or the value added method. Listen, the value added method, under it, national income is the sum total of the market value. The sum total of the market value of all final goods and services produced by the normal resident during a period of 1 year. So according to the value added method, national income is the sum total of market value of all final goods and services produced by the normal resident during the period of 1 year. According to the income method, what is national income? National income according to the income method is the sum total of the factor income earned by the normal resident of a country during a period of 1 year. So what is national income according to income method? According to the income method, national income is the sum total of factor income earned by the normal resident of a country during a period of 1 year. According to the expenditure method, national income is the sum total of the expenditure incurred on the final goods and services by the normal resident of a country during a period of 1 year. So under the output method, national income is calculated on the basis of market value of final goods and services. In this method, income method, national income is calculated on the basis of factor income earned by the normal resident. And on the basis of expenditure method, national income is calculated on the basis of expenditure incurred on final goods and services by the normal resident. So here we have seen how to calculate the national income according to output method, income method and expenditure method. Now let us discuss the aggregates of national income. Listen, the national income is having 8 aggregates. How many aggregates? 8 aggregates. Number 1, gross domestic product at market price, that is GDPMP. The second is NDPMP. What it means? It means national domestic product at market price. Then GNPMP, it means gross national product at market price. Then NNPMP, what it means? It means net national product at market price. Fifth is NDPFC. What it means? It means net domestic product at factor cost. Then GDPFC. What it means? It means gross domestic product at factor cost. Then NNPFC. What it means? It means net national product at factor cost. And the last one is GNPFC. What it means? It means gross national product at factor cost. So in the aggregate we can see that G, D, N, MPFC, these words are there. G stand for gross, N stand for net, D stand for domestic, and the second middle N stand for national, MP stand for market price, and FC stand for factor cost. So here we can read it: gross domestic product market price, net domestic product factor cost, net domestic product market price, gross domestic product factor cost, gross national product market price, net national product at factor cost, net national product at market price, gross national product at factor cost. I hope the point is clear. Now let us see the meaning. Listen, what is the meaning of gross domestic product at market price? Gross domestic product at market price means market value of all the final goods and services produced within the domestic territory of the country. So what is GDPMP? It is the market value of all final goods and services produced within the domestic territory of the country in an accounting year. Now let us see the second aggregates, that is gross domestic product at market price, that is GNPMP. It means what? It means it is the market value of all goods and services produced by the normal resident within the domestic territory as well as outside the country. Listen, the difference between the gross domestic and the net national is, here the domestic is there, it means that within the domestic territory of the country we have to consider. When I say national, it means the market value of goods and services earned by the normal resident within as well as outside the country. The third is net national product at market price. It is the market price. It refers to the market value of final goods and services produced by the normal resident within the domestic territory as well as outside the domestic territory without considering the depreciation during the accounting year. Here the net word is written, here N is written, not gross. G, N means excluding depreciation. So I repeat it again, what it means. Net national product at market price means it is the money value, fine, it is the sum total of the market price of goods and services produced by the normal resident within the domestic territory as well as outside the domestic territory without considering depreciation during an accounting year. Now let us see the fourth aggregate, that is NDPMP. It means net domestic product at market price. It is the total market value of all the final goods and services produced within the domestic territory of the country excluding depreciation. Here the domestic is written not net, national it means, and here net is written not gross. It means it is the sum total of the market value of final goods and services produced within the domestic territory by the normal resident without considering the depreciation. Clear? Let us see the fifth aggregate, that is NDPFC. Here factor cost is written. It refers to the aggregate factor income. Aggregate means it refers to the total factor income earned by all the factors of production in the form of rent, wages, interest and profit. In other words, it is the sum total of operating surplus, compensation of employees and the mixed income of self-employed. Let us see the next aggregate, that is GDPFC, that is gross domestic product at factor cost. It refers to the total factor income earned by all the factors of production. Here gross is written, it means including depreciation. Let us see the next one, that is NNPFC. It means it refers to the aggregate of all factor income earned by all factors of production within the domestic territory as well as abroad. The next is GNPFC. It means gross national product at factor cost. It refers to the aggregate of factor income earned by the normal resident of the country. Clear? Here we have to include the depreciation. Clear? Because gross is written not net. The point is clear to everyone? Listen, this particular GNNDMF we will use to solve the numerical. How we can learn this GNNDMF? Remember one thing, here G means gross, N means net. To convert gross into net, we have to deduct depreciation, and to convert net into gross, we have to add depreciation. So this first pair stand for depreciation, that is plus and minus depreciation. Second pair is national and domestic. N means net factor income from abroad. Listen, to come from domestic to national, we have to add net factor income from abroad, and for the domestic we have to deduct net factor income from abroad. This third pair, that is market price and factor cost. For the market price we have to add net indirect taxes, and for the factor cost we have to deduct net indirect taxes. I hope the point is clear. Net factor income from abroad means factor income from abroad minus factor income to abroad. Net factor income from abroad means what? It means factor income from abroad, money which we earn from abroad, minus factor income to abroad. It means money, income which we have to give to foreigners. Here we have to consider net value. It means factor income from abroad minus factor income to abroad. Clear? The next is net indirect taxes. What it means? It means indirect taxes minus subsidy. What is net indirect taxes? It means indirect taxes minus subsidy. Try to see it. We know that these are the different aggregates. We know the 8 aggregates are there. GDP MP is one of the aggregate. If we have to convert one aggregate into another aggregate, we have to use this particular concept. How we can learn this concept? The easiest formula to learn the concept is Germany ने नहीं दी मुझे फरारी. How we can learn it? Germany ने नहीं दी मुझे फरारी. Then plus minus for second pair, plus minus for third pair, plus minus. For the first pair we have to consider depreciation, plus depreciation minus depreciation. For the second pair we have to consider net factor income from abroad, plus minus. Firstly we have to add net factor income from abroad, then we have to deduct net factor income from abroad. Third pair, net indirect taxes plus net indirect taxes minus net indirect taxes. Clear? Listen, these three pairs we have. This pair we have gross and net, first one. Second, middle pair, it means national domestic. And third pair is factor market price, factor cost. So we are having these three pairs only, N, F. I mean first pair, middle pair and the last pair. The question is how to convert it. For example, suppose we have to convert gross into net. How to convert domestic into net. How to convert market price into factor cost. Let us see. If we have to convert gross into net, what we have to do? We have to find out net. Let us see what we have to do to find out net. We have to deduct depreciation. To find out national from domestic, what we have to do? To find out national from domestic, let us see. What is the sign on the national? Second pair, plus. So what we have to do? We have to add net factor income from abroad. Third pair, MP to FC. From M to F, what we have to do? We have to deduct net indirect taxes. I hope the point is clear. I repeat again. I mean here we only have to use three pairs. First pair is this one, second pair is middle one, and the third pair is this one. Product is common, so we don't consider it. So the numerical problems might be related with conversion of one aggregate to another aggregate. To convert one aggregate into another aggregate, we have to use this concept, that is Germany ne nahi di mujhe Ferrari. G means gross, N means net. For the first pair, we have to add depreciation or deduct depreciation. Second pair, national and domestic. What we have to do? Either we have to add net factor income from abroad, or we have to deduct net factor income from abroad. Net factor income from abroad means factor income from abroad minus factor income to abroad. Third pair is market price and factor cost. Here what we have to do? We have to add net indirect taxes, or we have to deduct net indirect taxes. Net indirect taxes means indirect taxes minus subsidy. I hope the point is clear. Try to understand the same thing through the example, through the numerical. What we have to do under it? We have to convert one aggregate into another aggregate. Take the example. Suppose we have to convert over here NNP MP into GDP FC. What we have to do? We have to convert NNP MP into GDP FC. We have to use this concept, Germany ne nahi di mujhe Ferrari. Plus minus, plus minus, plus minus. First pair depreciation, second pair NFIA. NFIA stand for net factor income from abroad. Third pair NIT. What it means? Net indirect taxes. Let us see how to convert it. What is being given to us? NNPFC is given to us. What is given to us? NNPFC. Firstly, what we have to do? We have to find out, check the first pair. The first pair is N, and what we have to do? We have to find out gross. What is being written over here? Net. What we have to find out? G. What is written given? N, and what we have to find? G. To find out G, what we have to do? To find out G, what we have to do? Plus depreciation. Okay. First pair is solved. Second pair, net is written, and we have to find out D. Net is given, we have to find out D. National is given, we have to find out domestic. Let us see. To find out domestic, what we have to do? We have to deduct NFIA, net factor income from abroad. So third pair is also solved. Now the next thing is MP to FC, market price to factor cost. What we have to find out? Factor cost, F. What is the sign? Minus net indirect taxes. So what we have to do? We have to deduct net indirect taxes. After considering all, what we will get? We will get GDP FC. What it means? Gross domestic product at factor cost. I hope the point is clear. Let us see the second example so that the thing become much more clear. I repeat the same thing. Germany ने नहीं दी मुझे Ferrari plus minus plus minus plus minus for first depreciation, second pair NFIA, third pair NIT, net indirect taxes. Listen here, NNPFC is given to us and we have to find out NDP MP. What is being given to us? GNPFC is given and we have to find out NDP MP. What is being given? GDP MP. So from G to N we have to come. Just to come from G to N, what we have to do? Minus depreciation. Okay. First pair is corrected, rectified. Second pair, we have to find out D. What we have to do? We have to find out D. Let us see the sign. Minus NFIA. NFIA means factor income from abroad minus factor income to abroad. FIFA minus FITA. So third pair is second pair is also corrected. Now the third is FCMP. So what we have to find? We have to find out M. To find out M, what we have to do? Plus NIT. NIT बोला तो net indirect taxes. It means indirect tax minus subsidies. After considering all, what we will get? We will get NDP MP. Clear? It's a request, please. Take out paper and pen and try to find out GDP FC from NNP FC. To find out NNP FC from to find out GDP FC from NNP FC, what we have to do? From N to G, we have to add depreciation. From N to D, we have to deduct NFIA. FC and FC is same, so we don't have to do anything because third pair is already done. We don't have to do anything. We don't have to make changes in the third pair. Third pair is already as such. We will keep the third pair as such. So what we will do? We will add depreciation and we will have to deduct NFIA. Third example, GNP MP is given and we have to find out NDP MP. First pair G to N, what we have to do? Minor depreciation. Second pair N to D minus NFIA. MP is same, so we don't have to do anything over here. So minus depreciation and minus NFIA. Fifth example, NNP MP is given and we have to find out NDP FC. First pair is same, so we don't have to do anything. We don't have to touch the first pair. Second pair, N is given and we have to find out D. So N to D, what we have to do? Minus NFIA. Third pair M and we have to find out F. So we have to deduct NIT. So what we have to do over here is we have to deduct NFIA and we have to deduct NIT. I hope the point is clear to everyone. Listen, we know that we are having 4 aggregates. Try to learn and try to see how we can easily learn the 4 aggregates by using this concept, that is Germany ने नहीं दी मुझे Ferrari. Listen, we will use GDP MP as the base definition. What is the base definition? Market value of final goods and services within the domestic territory during an accounting year. So this is the base definition. Clear? So what is the base definition? Market value of all final goods and services produced within the domestic territory of a country in an accounting year. Remember one thing, if we have to find out N from G, what we have to do? Minus depreciation. So what will be the definition for this one? To define NDP MP, we will say it is the market value of all final goods and services within the domestic territory of a country excluding depreciation. So to find out n, what we have to do, we have to deduct depreciation. So in the definition, in this definition, we only have to add one word, that is excluding depreciation. To find out this, in this definition, what we have to do, here G and G is same. The only difference is D and N. D means domestic and N means national. To find out the national, what we have to do, we have to add NFIA. So in this definition, what we have to do, we only have to add including net factor income from abroad. So what will be the definition? GNP-MP is the market value of all final goods and services produced within the domestic territory during the accounting year, including net factor income from abroad. To find out this NNP-MP, what we have to do, we have to make changes in the N and we have to make changes in the N. First pair and the second pair has to be changed. So what will be the definition? The definition will be, it refers to the market value of all final goods and services produced within the domestic territory during the accounting year, excluding depreciation and including NFIA. Excluding depreciation and including NFIA. I hope the definition is clear. To find out factor cost aggregates, we will use NDPFC as the base definition and we only make changes in the base definition. Let us see what is the base definition. It is the sum total of the factor income earned by the factors of production. What is NDPFC? It is the sum total of the factor income earned by the normal resident of a country. To find out GDP-FC, what we have to do? G means gross. So what changes I have to make in the definition? It is the sum total of the factor income earned by the normal resident, including depreciation. To calculate this, what we have to do? Only there is change in the second pair. So what will be the definition? It is the sum total of the factor income earned by the normal resident during an accounting year, including net factor income from abroad. To find out this, what we have to do, we have to make changes in the first pair and the second pair only. So what will be the definition? It is the sum total of the factor income earned by the normal resident of a country, considering depreciation and factor income from abroad. I hope the definition is clear. I hope you know how to frame the definition of your own by the use of that concept, that is the Germany ne nahi di mujhe Ferrari concept. That's all I have in this video. Thanks for watching. God bless you all. Dear subscribers, if you have not subscribed my channel, please subscribe the channel and don't forget to press the bell icon so that whenever I upload the new video, you get the notification.